Hi everyone, welcome back to Be Rich. I have Sashwath and Anand with me today. This is our New Year program, and I thought we'll have both of them with us and discuss the past, the present, and the future. This will be a short, quick take on what's happened in the past, year 2023, where we are right now, and going forward, what we can look forward to. Without wasting much time, I'll jump into it, Shashwat, and let Shashwat kind of briefly touch on what's been happening in the year 2023, what he feels are the key moments in financially and in terms of investment and economically, globally speaking. Shashwat, what do you think were the key moments this year?
Yeah, this is something we've talked about in the Tamil channel as well, although a lot of it was in English, so I'm sorry about that. But some of the key moments in 2023, like I said in Money Picture, was that one, you have the China, which has first gone into deflation after a long time. That is, if you negate the COVID period as an outlier, you'll end up seeing that China has gone into a deflationary period after a very long time. And this does not bode well for China, economically speaking, because a country that goes into deflation talks about how there's going to be degrowth in the country. And degrowth is not very good because you end up seeing tons and tons of people lose jobs. Those without income security end up starving in severe cases. If there's no big unemployment protection scheme, you're going to have a lot of trouble. And China hasn't been very sympathetic to its industries, with the real estate industry being in big, deep trouble, and Xi Jinping refusing to do anything about it. Xi Jinping is saying, "Hey, you made the mistake. You better pay the price for it." That seems to be a ham-handed policy. I think there could be more nuance to it because if you're not willing to take care of your industries, even if they made a boo-boo, you're going to have a severe case where people who had nothing to do with making such decisions are going to be punished for it, and you're going to have a hot mess in your hands. And the 20 years of progress which China has made is going to be put under trial when you have a bout of deflation. And gone are the days when you had no control over central bank or monetary policies. Those were back in the 30s and before that. Now you have, thanks to Keynes, you have tools which you can use to stave off deflation. It's up to Xi Jinping and his financial minister to figure out how and when to use these. Second thing which I have observed and my uncle has also talked about is that UK stocks are looking cheap again. And UK stocks have been something, not just UK stocks, but in general, Western stocks have been something which we wouldn't have been able to consider 10 years ago. But today, things are looking better for us to be able to consider them. Case in point, Japan. My uncle has talked extensively about Japanese stocks, and we've talked about companies like Intel, Waste Management, Unilever on this channel, Be Rich. You can look up those videos. But and we talked about Nike as well very recently. If you look at UK companies, they're looking cheap again because they've been battered by the global investor circle, and for good reason because the UK has been on a war path in terms of severing ties with everything they had to do with the world. They're moving step by step into the direction of being an autarky rather than a global financial destination. And I think my uncle will elaborate on that in a bit. But this is another thing which I've observed. And finally, how can one miss the interest rate cycle with interest rate hikes in 2021? And now we're seeing a dovish stance which has come earlier than expected, with Jerome Powell taking a complete U turn. And that's something which has happened this year with its effect on gold prices, which I think I'll hand it over to my uncle to talk about.
Anand, so where
Hmm.
have you been investing this year? Where have you been putting money this year? You and Shashwat. Shashwat has very nicely, eloquently explained what's happening globally. So where have you been putting money?
I bought a lot of Unilever, bought some American stocks, bought some Japanese stocks, very little in Indian stocks relative to my portfolio. Money in bonds. I didn't actually add on to gold, but I had a lot of gold before. So benefited from the gold and benefited from gold stocks in India, especially the gold retailing stocks. And also I am now already putting money into companies which are financing against gold because I expect a 20% jump in price of gold. I expect gold financiers to do well. And I'm looking for very small pockets in India for cheap stocks. I'm buying undervalued Japanese stocks, undervalued in England Unilever and American stocks. This is what I'm looking at. This is basically,
Okay.
and in India, I'm buying into bonds.
Okay. This is what you guys have been doing this year. And at the current moment, this is what seems to be going on. But looking forward, there's an American election cycle coming. There is an Indian election cycle coming. There are many other economies, countries which are going to have
40
election cycles.
countries are going to vote in 2024.
Yes. And looking at the past trend this year, it seems to be we are leaning towards going towards more the populist side. And I maybe see this trend coming out further this year. What do you think? What do you think the implications of these elections are?
First thing is from what Sashwath told me about China, what Francis Fukuyama said is right, that any authoritarian state will do badly in the long run. The collapse of China clearly shows that authoritarian states will fail. In 1991, the Indian economy was $270 billion. The Russian economy was $530 billion, almost double the size. Today, India is $3.8 trillion and Russia is 1.1 trillion or 1.2 trillion, I don't know, somewhere there. Indian economy is more than two times the Russian economy. Russia, for a long time in this 25 years, has been ruled by Putin, an authoritarian. The collapse of China is under Xi Jinping, who is authoritarian. Deng and his followers were not authoritarian. They allowed the Chinese labor to make a lot of money. Chinese companies, private sector, they created companies like Tencent, Jack Ma, Alibaba, and all that. Didi, and a lot of companies. Everything was, all the Chinese private sector was completely decimated and destroyed by Xi Jinping. These two things show me that an authoritarian regime over the long term will do damage to the economy and to the society in general. America can afford to have Trump because their systems are very strong. The courts are independent, people are independent, and there's a constitutional limit on how much a president can serve. So the American liberal democracy will survive, but Trump may give us a buying opportunity.
Okay.
It's like buying on dips. The rest of the
Understood.
world has to choose whether they want to be liberal democracies or they want to be authoritarian. If you choose the route of authoritarianism, you will definitely pay the price. Like I told you, there's a smile curve. India needs to concentrate, the south and west of India needs to concentrate on services. If you want manufacturing, it has to be the northeastern side, northwest, not Punjab, not Haryana, not Noida. I'm talking
Understood.
about Lucknow on that side, Allahabad, Calcutta,
Jharkhand, Bihar.
Jharkhand, Jharkhand, Bihar, and Gorakhpur. Those are the areas where you can manufacture.
Understood. Shashwat, so taking all this into consideration, what Anand was talking about, and the fluctuation in the global political landscape, some seismic shift happening, maybe not. We don't know if Trump will come or not, and all this uncertainty put together. Personally, how will you be navigating this as a global investor? I'm not talking about India centric. I know in India we'll continue being in bonds till we see any recovery, I mean, correction happening in the Indian market. I get that. But globally speaking, because a lot of our viewers have been asking you for this, specifically, globally, what would you do? Where would you place your bets? I know
Yeah.
personally you don't have currency to move around, but if there are people who look at you for some cues, what would you say?
See, as far as I'm concerned, uncertainty is when a true investor shines, and uncertainty is when you make the most amount of money. At least that's what we've seen in the past. Those George Soros is someone who banks extremely well on uncertainty, and he has a tell in his back. So whenever he thinks he's making a bad move, his back starts hurting, and he sells the position. So just like that, you need to have a certain tell which is going to be there to help you, where your gut feeling can come out and tell you that hey, you're making a mistake. But when you have such a tell, when you have a red light which is able to go off, you can make a lot of money during uncertainty. And if you actually try to de-thread this situation, you don't even need to know what's going to happen, whether Biden is going to come or Donald Trump is going to come. You don't need to know whether Modi is going to win or Rahul Gandhi is going to win. You don't need to know these things. You just need to know whether or not the asset you're buying is fairly valued or not fairly valued. And you need to have a margin of safety. With gold, you know that generally speaking, it's going to be a while until Jerome Powell is going to do a belty, or I mean, they say that in Tamil, but we don't know whether he's going to do a U turn on his policies from dovish to bearish. It doesn't look like it. So you know that gold has an inverse relationship with interest rates. There you go. That's one formula sorted out for you. Second formula to sort out. You know that interest rates are going to decline, and you know interest rates act as gravity for stock prices, and which immediately tells you that stock markets are going to do decently well. Okay, stock markets are going to do decently well. What do I need to know before getting into stocks? I need to know that there are fundamentals to look after, and I need to know that I need to buy undervalued companies. And when you look at undervalued companies, you can look at PE ratios, you can look at earning power, you can look at debt. And if a company has zero debt, you basically have a good idea saying that, okay, this company, even if they're not going to make any money, they don't have any interest payments, that's fine. That year it's going to be okay. So these are the things which you need to keep in mind, and uncertainty doesn't look that looming or that threatening anymore. You don't need to know what's going to happen, is what I'd like to say about that.
Great.
I wish you all a happy new year and a great investment year ahead. I think we had a good conversation. Anyway, I'll try to make more appearances this year than what I did last year. Thank you.
Thank you. Well, guys, that concludes the video today. Like Shashwat said, don't worry about uncertainty in the market. Don't focus on the noise. Focus on what you do know and what you can predict and follow, which is gold. So if you're a new investor and you're joining us for the first time this year, you should be looking at gold. It's even what Anand had said in Money Page 2. In terms of the stock market, if you see value buys while analyzing each individual company, if you see value in it, please do think about buying and investing into those values. Other than that, don't worry too much. Don't panic too much. All these things are transient. Even our political landscapes are transient. And we'll get out on the other side, fine and dandy, as my dad would say. Thank you and wish you a happy new year. And see you in the next one soon. Yeah.
One last point which I want to make is that we're not SEBI registered investment advisors, nor are we advising you to do anything. All of this is to be taken at your own discretion. Yeah.
Yeah, we're just purely hobbyists over here. These are just our personal views, and we're sharing it with you on a very personal level. We're not endorsing or saying do anything. This is our view, and you can take what you want from it. Please do your research. And as Shashwat says, have someone who's a good financial advisor on your payroll, gives you the right advice for your risk. Thank you for watching the video. Wishing you a happy new year, and see you in the next one soon. Bye.
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 So after Kuwait, my team has decided to do an event in Trivandrum. Those who are desirous of meeting me in Trivandrum can contact our team at trivandrummp@gmail.com, the mail ID given below, or the WhatsApp number given below. My team would fill in you with the details. The event would be in January 2024. It's a great privilege and honor that so many of you in thousands have subscribed to my channel and have supported me. I have written 2 books in English, The Alchemy of Money and Ordinary Stocks, Extraordinary Profits. These books are published by us and are ready. If you want to procure a copy, send us a message to the WhatsApp number given below and my team would respond to you. If you want an Amazon Kindle copy, you can click the link below. Finally, those who wish to consult with me can send a mail to berichenglish@gmail.com. Once again, I thank you for your support. If you like this video, press the subscribe button of my channel, hit the like button and turn on the bell notification.